My name is Thecla Deterville. I'm Managing Director of Celestial Self-Development Center. At Celestial, we offer services as soft skills facilitators and business consultancy with emphasis on human resource development and organizational development as well. With me today is my colleague, Donna Hinkson. Donna possesses an MBA. She's an experienced banker and insurance executive. She's also a certified financial planner and a licensed representative of Sagicor. Recently, Donna facilitated a workshop in collaboration with Celestial titled Retirement Planning. During the feedback we got following this workshop indicated that persons were highly interested and they thought that it was a topic and a subject that should get, wider dissemination. And so with taking our feedback seriously, we've decided to have this chat with Donna, and so that we can, clarify some points and bring out some ideas. So Donna, welcome. Thank you for joining us today. We're pleased to have you, and we're very happy with the, previous session as it went. So welcome, and let's start chatting.
Thank you, and thanks to Celestial Self-Development Center for having me here today.
Okay, Donna. Okay, but let's start our discussion. My first question: would you say that our state pensions is sufficient as incomes, retirement income for any individual? What's your take on that?
Thecla, retirement planning is a journey. I always say that it's a journey, it's not a destination. It has to be planned, it has to be structured. And that is what will allow us to retire comfortably when that time comes. And to answer your question, certainly not. State-owned pension funds such as our NIC is designed to cover 40% of the average worker's salary needs during retirement. Who then is going to cover that 60% or 40%? For most of us, we would have to live on what we can afford. Most of us would have to reduce our lifestyle. But there certainly is a gap, and that is the gap that we need to have the conversation about today.
Okay, great, Donna. I guess as we go along, we'll begin to see how those gaps, can be narrowed, if not eliminated completely, though. But again, what would you say is the best time to begin planning for retirement?
Earlier is always better. If you get ahead early, let's just say in your 20s, if you get along in your 20s, you will capitalize on this concept of time value of money. We know there are two variables here. It's the time factor and the rate. And just imagine someone starting their retirement journey at 20, juxtapose that to someone starting at 40 years. The difference that can make in terms of acquiring wealth and creating aggressive opportunities for accelerating savings, accelerating wealth, and therefore creating a far better portfolio that will help you to be far more comfortable in your retirement. So earlier is always better, but like I always say, start today. We have to start where we are. So start today.
Okay, beautiful. I really like the concept of start where you are, because again, we will find that there are persons who may have had the opportunity to start, early, and those of us who may not have started when we should have, and then sort of we literally in catch-up mode. But I think your message here is that there is still hope. We may still be able to start somewhere. So, I'm really pleased with this. What would you say is the downside or pitfalls of inadequate retirement planning?
Proponents have said, for example, that 60% of retirees are fully dependent on family, friends, charities, even the state to take care of them in retirement. So that means that people are just not planning early enough, or they're just not doing the proper planning. Poor planning, of course, is stressful. It's going to lead to a lot of headaches, poor quality of life, a total dependence on family, on friends, on state. And sometimes we see people have to work way past their retirement age because they have no other choice. They just didn't do what they were supposed to do. They just didn't pay attention when they had the strength, when they worked, and therefore they have to make up in their retirement years. And this is really a stress, and sometimes it leads to an early death.
Okay. Thank you for that. Again, it's the question of some of us we've not been exposed sufficiently. We don't have the mindset that, this is something that needs to be planned for. We figure that, it will happen, because we worked. So again, I think the understanding of the concept is really, really important. Okay. We know that there are a number of tools that you can utilize to get you as part of the process of retirement plan. But I want to specifically ask you, how does insurance in itself factor into the retirement planning?
Thecla, a person cannot build a personal strategy, a personal protection strategy without insurance. Insurance is one of the safest ways, if not the safest way, to transfer your risk of financial losses. When we talk about financial losses, we are talking about events such as accidents, illness, property damage, death. It is the only sure way that you can fully transfer that risk for a small amount, which we call a premium, that is paid, say, quarterly, monthly, yearly. An insurer or an insurance company would take on that risk and pay you in the future the benefits that are covered under that policy. That is basically how insurance works. And insurance will take you through those difficult periods because it is really, 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 really an income protector. It is an income replacer, and it is really going to be there for you in the event of sudden death or accident, as we say.
Okay, good to hear that, Donna. As in terms of insurance, I think there's really a lack of information when it relates to insurance. We buy insurance policies, and we just put them aside. We put them, maybe they're somewhere in safekeeping. Sometimes some of us don't even know where those policies are. What are some of the tips you can leave with our viewers in terms of how to manage, that insurance policy, regardless of when it was purchased?
I've always said people must learn to treat their insurance policies like they do any other asset class. This means that they must constantly review, rebalance where necessary. People need to know the type of insurance they have, the terms and conditions set out in that policy. They need to know things like the premium, of course, the face value, the maturity date, the grace period, those beneficiary clauses. Is that policy revocable easily, or is it irrevocable? What are the cash values? And insurance advisor also have a responsibility to reach out to their clients, and we say this should be done at least yearly, or in some instances, every 2 years, a minimum period of every 2 years. I would say an insurance person or an agent or an advisor should really reach out to their client and review those policies. But clients also have a responsibility, because you want to know what your finances look like in your bank account. You want to check your investment margins every day. So you need to also understand your policy, because life situation change. Sometimes you may have bought a policy for a specific reason, and you may have done that a long time ago. Say, for example, as a security for your education, but things have happened. Life has changed. You may have a kid, you may have gotten married, you may have bought a home, and you may just be in a better position financially. So you really need to make sure that your insurance is adequate and your insurance is timely, it is appropriate for the need, and that you are fully covered in the event that some financial loss or something catastrophic should happen to you or your family.
Okay, great. So you're in essence, you're saying that we should manage our policies just as we would manage any other asset.
We have to.
Yeah, certainly. Thanks.
It's our responsibility.
Okay, thank you. My other question is, what impact would you say that lack of retirement planning could have on the individual, on families, and on society as a whole?
A lack of retirement planning is really a financial burden. It's a financial burden on families. It's a financial burden on friends. Charities, we see, and the private sector, we see going a lot to help out people during retirement, to create what we call programs that cushion people. But a lot of this burden has to be borne by the state, because the state, a government, must prepare for its people. And imagine working all your life, and in your golden years, you are left at the mercies of someone else because of poor planning. This is very devastating. And we see it happen too many times. So government and the state has a responsibility to create, I would say, social network programs, but equally important, or more important, I would say, organizations have an obligation to educate, to use programs such as this one, people who are skilled in helping people to understand, structure, and plan their retirement. I think it's an obligation that organizations should take on and should have in helping their employees to plan better, because this is what we aspire to. If we do this and we help our people in their golden years so that they can live comfortable, they can live a dignified life during their golden years, then it would be worth it. We have to take on that whole mantle of financial planning, which encompasses retirement planning and how you grow and how you make those investments. I think organizations really must shoulder that. And this is going to alleviate a lot of the problems and the high cost to the state. And that is where people like me and other financial planners come in, and we are really there to help.
Okay, great. Good to hear that. If you could just give us an idea of some of the sort of, takeaways from the program that you offered, some of those key learning objectives from the program that you offer.
Yes, Thecla. So what we do, we rarely take people through the nuts and bolts of retirement planning, financial planning, that is. And in my program, we demonstrate an understanding of retirement planning. Retirement planning is really understanding what your retirement portfolio should look like. Remember, we talked about that 60%, that 40%, that's probably usually state pension, that how we bridge that, what your portfolio looks like. It's an understanding of how you assess what is going to be your expenses, what your total expenses, including your medical bills. You have to factor in things like your life expectancy. You have to factor in like medical care. These are critical things in your pension plan. So we help you to see how you factor that in. And then you need to, when you've done that, you need to subtract from that, what is your pension fund? And then that's the difference now that you really need to bridge. And that's where your investments, that's where your accelerated savings, that's where your emergency liquidity funds, these are all critical in the whole overall planning. So we would take you through that entire process. We would show you how to structure your investments from your savings account and all your investment classes. And we would actually create a real life practical scenario, someone's objectives, someone's retirement planning goals. We're gonna set those goals and we are going to solve those goals. So when you're finished, you actually have a takeaway as to how you can start to look at yourself and make the differences, how you can actually start to think of your retirement and start to work in a way to structure and plan for those golden years.
Donna, there's something you just said that really struck a chord with me, and that was the whole question of the responsibility of organizations. Again, because it hasn't been, it's not a discipline that we have. It's not, maybe it's not, you see sometimes it may not be cultural. I think whereas people would see retirement planning as a very individual process, yes, it is. But I think organizations or corporations also have a responsibility to at least teach, provide the information to their team members so that people are more aware, and those persons would not just end up working for years and figuring that, at the end of the day, they find surprises. Some people just think the pension is automatic. Other than NIC, they may think that there is a pension, and really there isn't a pension. And one of the other challenges we have when an organization offers a pension scheme whereby it's contributory, the employee as well as the employer contributes, and people tend to opt out of it. So, you could see the challenges that in itself, that lack of knowledge, that lack of understanding, that lack of sensitivity, to what retirement can bring in itself. Sometimes we feel, well, maybe because we have our homes and we have our cars and they paid for, we will be okay. No, things happen, life happens. The house needs to be maintained, it needs to be repaired.
The health bill.
You may need to rewire, you may need to change your plumbing. You need to change your roof. There's so many things that can happen. So even if you feel that, now at this stage, when you are, at your best, you can work, you can earn, you can save, that is okay. And we need to think future. We need to think future. And I think that's where, the value of at least the employer sensitizing their team members to what the possibilities are, what can happen, what's the downside, what planning, the difference that planning could make to their lives. So I think, when you raise that point, it really resonated with me, because it's not only about individual, because if somebody has worked in a particular institution for years, and that person, after all of these years of giving their best, end up being almost destitute. It reflects, to my mind, it reflects on the organization as well. I'm not saying that you have to be the one to provide a pension if that's not your scheme, but at least give them the information, give the knowledge, so that they will make a decision which way they want to go. But at least it's not that they just blank on the subject. So I really want to thank you for your insights, for the information that you've shared with us. We look forward to getting some responses from persons who may wish to avail themselves of that, the learnings encompassed in that presentation. And we will share our contact information. For us, Celestial, our email is info@celestial, CLESTIAL, and you could reach us by telephone at 453-1924, and we're on all social media platforms. And once you search Celestial SDC, you will certainly find us on all the various social media. Donna, could you share your information?
Yes, Thecla, thank you. So I just want to say in closing, retirement is a journey. It's not a destination. You don't just wake up one day and retire. It has to be planned. Again, it has to be structured. It's never too late. People need to start today. You either revise your plan or you devise your plan. And that is what it's going to take for us to really enjoy or live what we call a respectable, dignified life during our retirement years. So I can be reached at my phone number. It's 485-8610 or 285-8961. My email address is Donna, DONNALY, Hinkson, HINKSON, one word, @gmail.com. You can also find me on social media. You can find me on LinkedIn, we can make a difference in your life. Thank you.
Thank you very much, Donna.